All right, everybody, welcome to this episode of Real Estate Chat with Jonder Perez and
Robert Eid.
all right, and we're talking about how the market is going. We are in the midst of the spring market. Spring weather is definitely here. Spring activities are happening. But as Robert pointed out before we started recording this, if this market was happening in January, it would be a
Fantastic.
market, except it's happening now in the spring. So
When
let's
it's
talk
supposed to
about it,
be.
which it's
When it's
supposed
supposed
to
to
be.
be. Yeah.
Okay, well, it's supposed to be. So let's talk about that. And we're going to load up here Robert's charts, and he's going to take us through what's transpired and what is to come. Robert.
Okay, well, we're projecting based on what's happened already in March to the end. And based on that, we're not going to get 7,000 sales, but we're going to get 6,900. And that is the 20th best March in the last 28 years. So it's not the worst, but it's not the best. And you can see it there relative. We're still, 30% off the 5 and 10 year average. And you can see way at the top there, the all-time record month was 15,000 something or other, which was done a few years ago. And so that makes all Marches look sad. And we're not going to see that again. Last year was also a super duper year at nearly 11,000. We're not going to see that again. But we can compare it to the 10 year, which most of those 10 year were pretty darn good. So instead of being, which we were in October, November, December, January, and February, 40% off the 10 year and 5 year average, we're only 30% off. So we're better. Now, that's the way it is every year. The spring is better. Spring has sprung. March break has sprung. So we're doing just normal. We're just not in a boom.
So that's the key part to remember about this, right? For all of our viewers here of Real Estate Chat is that we are off the peak. And in our previous episodes, in our February episodes, we celebrated the anniversarying out of those peak prices and peak sales. And so, Robert, as we go and look at the intricacies of this. And for those of you who have asked in previous comments, hey, I can't read these charts or graphs on my phone or on my computer screen, they're not big enough. Go to Robert's blog where he publishes the full versions of these, www.unclebobexplains.com. Robert, take us through this and then what we should
Okay, well,
expect.
we're trying to guess on the unknowable. We can't follow every single sale that happened in 416 and 905, so we guess. So we take last year's price, I'm sorry, last month's price, February of 1095, and we say, okay, what normally happens in between February and March? And normally it goes up most of the time, but it goes down some of the time. Now, definitely, so I took the average is zero. So I said, okay, well, it's not a down month. So what is just the up month? So just the up months average 1.57% in the transition from February to March. So I used that. I added 1.57% to February to get 1,112 and change as the average price for March, which means that we're continuing an upward trudge and we're not falling. And not falling is the major, major, major accomplishment. We went all through last year of falling, 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 falling. So now we're not falling. Now you can attribute to a number of reasons, and I'm going to attribute to people have stopped being ultra panicked in their decisions to not buy or buy, and not panicked in the decisions to sell or not sell. So we have no spec buyers. So that's good. Why is volume down? There's no spec buyers. Why is volume down? There's no first-time buyers, or there's very few first-time buyers because they're still scared the brains off, and they're trying to find the greatest deal, like their dad told them to wait till a year from now before they buy anything. And so you've got Canadian buyers and sellers watching everything and picking the very best out of the bunch, and sellers who are saying, well, it's a bit early in the year, it's still snowing, why shouldn't we put up in April? So the best time to put it up is March the 15th, which here we are. So everybody is buoyant now. Things that are good are selling, and buyers are saying, well, there's a few things to look at, but inventory is still way down, which we'll look at later.
And
And
any comments about, so Robert, any comments about, so the Fed continued to raise their rates. Inflation in Canada has gone down. It's still a touch over 5%, but less than what it is earlier this year. And so you mentioned, consumer confidence is a key part, buyers confidently buying homes.
yeah,
What could possibly happen in the upcoming months if something were to change? And remember, in several episodes, in our past episode, you talked about this being a conditional, like the Bank of Canada holding the interest in holding back the interest rate increases as a conditional pause. Do you think there might be a possibility that they may have to start increasing again at some point, whether it's in April or later on this year?
Okay, Canada is following the United States, but the United States is a definite different situation than we have here in Canada. Canada is dull and boring people and dull and boring banking, except their banking is even duller and more boring. So the reason that the Fed stopped increasing like they were planning to, because they're following a model from 1985 wrongly, is because they had a couple of banks blow up. And the banks blew up because they were following advice like, oh, it's going to be low rates for a very long time. And they believed the advice that came from the very young, the same guys that are chastising them now. So it's complicated. But I'm going to say that the idea of killing inflation by raising rates is proving itself to be effective. But there is a lag. So there's going to be, oh, okay, get another half point. But you got discounted rates off of those things for the actual on the ground buyers and sellers, which is all we care about. We don't care what the Fed does. We don't care what banks do. We don't care about anything. We care about consumer confidence and what the interest rate is if you're a super duper prime buyer. So everything is different from a month ago for a number of reasons that nobody anticipated. But if everybody was on the board of directors of one of these monkey business, Silicon Valley Bank, we would have said, oh, it's going to come, because they paid themselves a big bonus before this who all hit that propeller. So they knew what was happening, but they knew they were going to get bailed out. They did get bailed out. It's 2008 part deux.
All right. So let's just keep on being boring and safe, and let's
That's
just
it.
keep steady prices, steady sales. That's the best that we can ask for up here in Canada. Let's
Correct.
look at the active inventory. How are we relative to previous years on average in the past 5
Well,
years?
we're off by 20%, which that's not a surprise to anybody. Fewer properties are coming on the market, and some are selling. And there were fewer like a few months ago. So where's the inventory going to come from unless it comes from new listings? So they're gradually moving up. We're at 10,000. We should be at 13,000. So we're less inventory than we should have, and they're not turning over. So it's piling up a little bit. The real key, which we don't know, we only can guess at, is new listings. What are the new properties coming on the market, and how are the people reacting to them? Inventory means nobody bought it. It's still sitting there.
And so let's look at the net new listings. Net new listings. New
Well, we
and
can
net.
only guess on that. We can only guess on that. I see a lot of terminate and relist. So it's going to be, I put 20% in here saying 10,000 new and 2,000 relists. But I know there's more than 2,000 relists, but who knows? And somehow I feel that if inventory is 10,000, then there was not 10,000 new listings come on the market either, because there was only 7,000 sales. And so it says more like 8,000 is going to be what it is, but you got to guess at something. But that is still way below where we should be. The 10-year average is 16, 5-year average is 17. So we're way below, and everybody can tell you that there's nothing for sale. And so if you seriously want to buy something, you're looking around, you're saying, well, I've seen all these. I don't like any of those. What's new? So you look at the new ones, and the new ones got a hold date on it. You say, well, it's a very attractive price. How many offers do you think they'll get it on offer day, and how much over the asking price do you think they'll get? And we're back to where we were again. So the best strategy for selling is to do the offer date at a reduced price, 7 to 17% below the your expectation, and it works every time. Buyers will buy it because if yours is good, they'll buy it.
And if you were to stab a guess, I know Robert, you have a very good pulse on the market. If you were to stab a guess though at whether the cancel realist is happening more prominently now or less prominently than it was a few months ago, what would you say? Are we seeing less cancel and realists happening, or the same, or are we going to see more happening?
I would say more. It's now a permanent feature of the listing agent's toolkit, because if they take the listing for 120 days and they say, sure, I'll put it on whatever price you want, Mr. and Mrs. Seller, and it's not working. So the Mr. and Mrs. Seller, it's got to be your fault. Salesman, you are not doing the job right. If you're the broker, you know what you're supposed to be doing. You're not doing this. Okay, well, let's tell you what we'll do. We'll change strategy. So if they were high, they'll go to a low list with a date and try that. So it means terminate, get rid of the history, do it again. I say we're doing it more. The ones that sell are 80% with a date, with a whole date. And okay, that's not answering the question. More
You know what?
terminate. Yes, I believe so.
What would be interesting is if we crunch those numbers. So maybe we'll take a sample of March once March is over, and we're going to say, hey, look, this is how many got listed. This is how many got terminated. This is how many
That's what
actually
this chart
fell.
is. That's what this chart is.
As an overall view, yes, absolutely, as an overall view. So we're going to get to see that, and we'll finalize. We'll get that the
When it
actual
comes.
figure
Yeah, it'll be a week and a half. Yeah, you're right.
exactly once Toronto Regional Real Estate Board publishes the official numbers. And now let's look at this chart, which shows the future price of where prices are going based on interest rates.
Well, this is the simple chart that says if interest rates go up, price go down, but by how much? So this one I did quite a while ago, but it still comes down to the same thing. I took the price for principal and interest in 1990, which was $2,140, and then adjusted it by 193%, which is the CPI change between then and now, and you get 41.47. So that's the monthly payment that people will pay. Now, what do you get for 41.47 if you add 25% down payment to it is the purchase price on average. So the only variable is, because the payment stays the same, is the rate of interest. So this whole array over on the sort of in the middle on the side is if you have 7%, then prices will fall to 800,000. If at the very bottom of that at 2%, with the same monthly payment, prices are 1.307, which is where we were at the peak. So we're not at 4%, we're not at 5%, we're somewhere in between. So the average price based on this formula should be somewhere between 950 and 1050, and guess what? It is. So I do believe that this works. Monthly payments are the key to how people make their buying decisions, just like leasing a car. Doesn't matter what the price is, what's the lease payment? And they can only pay so much, or they only will put that much of their monthly income to housing because they're solid performers and sober investment citizens. So there's a lot of variables that go into this every month. I just did a rejig on the CPI, so that made a change, and interest rates and price and everything like that. But it's about the same thing, just around $4,000. Add four grand times the interest rate plus 25% down payment. There's the average price, and it looks like, I'm not going to say the worst is over, but based on everything that has happened, it's not going to be the calamity that the worst case scenario boys were talking about.
And so when we're looking at it from the perspective today of somebody who is selling, first of all, Robert, somebody who's selling should have been on the market right by now, right? We've been telling everybody put your home on the market since February, since early of this month. And so if your home is not on the market and you're looking to sell, you should be on the market already. And if you're not, then you should get working on that. How about somebody buying? So the rates didn't increase. I mean, Bank of Canada, at least in their terms of their policy. And so should I be comfortable to buy a home now, Robert?
Okay. Get used to having 4 to 5% interest rates. Just get used to it. You're not getting 2% anymore. It's not going to 7. So once you get over that hurdle as a buyer, then you say, okay, what can I afford? And you figure out, can you pay 700,000, 900,000, 1.1, 2.1, and then start examining that market. As things move along, here we are at the end of March, by the end of April, there will be more inventory because the sales will not match the number of new listings. People are putting their homes on the market. So the balance, it's still a seller's market really from a numbers basis, even though everybody thinks it should be a buyer's market because it's so terrible, but it's not terrible because there's not a glut. If there's a glut, it becomes a buyer's market. But there will be more come through April because the crocuses will be out, and traditionally that's the time when it's the best time to put your property up for sale.
Should I wait till the late spring, early summer, or even summer when prices historically and normally dip anyway because of the seasonal basis?
Well, if you want to pick from a smaller supply, yes, you can do that. But look for something that appeals to you. Again, you're not going to get a mortgage for less than 4%, no matter what. It's just not going back down to that territory. So you're going to look for a property that's in the price range that you can afford, and you're doing your due diligence. You're not panicking. You're not buying the first thing you look at. You are examining the market. You're saying, what can I get for 10 miles further out? If I go to 2 MLS districts, what do I get? Is it worth the distance? And so, like, that's what everybody does when you have enough time. We just haven't had enough time to do that thorough examination over the last 5 years, let's call it, when it was boom, raging buy or die. So I don't think we
So
said anything different apart from don't wait, look hard, bargain effectively.
exactly, do what's right for you and enjoy this boring and stable market, because we may see it for a while, and unless there's any major shifts or anything else that changes, this is it, right? This is 4 to 5% plus interest rates. This is the level of inventory that's going to be available, maybe more, maybe less, depending on where things go over the next couple of weeks. But in terms of prices, there's your market forecast for end of March. And if you have any questions for us, feel free to write it into the comments. Thank you for joining us on Real Estate Chat. Make sure you click like and subscribe. We'll see you in our next episode. Bye for now.
See you later.